Okay, everyone, thanks for coming to this session. I really believe in the power of story. In our previous panel and in other panels, you're going to hear the same trading axioms over and over again, the rules of trading.
Yeah. There you go.
And that's valuable. But there's something about a story that can sometimes stick in your mind and help you out when it matters most. So this panel, we have some real traders. And we're going to talk about the power of lessons, these hard lessons that they've learned, the humility that comes from them, and the success of being around people who have been successful. And I think getting to know real traders, meeting traders who have been successful, I think is one of the most powerful, motivating things to see someone who's done it and the success that they've had. So I will go through our panel here. I'll grab a seat and let them introduce themselves, and then we'll get right into it.
Our introductions.
Go ahead, yeah.
Yeah. Good afternoon, everyone. I'm Robert van Eyden. I am CEO of Scope Markets. I'll be wearing two hats. So I'm the CEO, and then if you are around, I will be talking about 3 in my book, The Badass Trader. So I guess I'll be sharing a lot of battle stories from the book as well. That's who I am.
Hello, everybody. Can you hear me okay?
I don't think your mic's on.
Hello? Hello? Can you hear me? Hear me? Okay. Hi there, my name is Lourens Reichert. I work for Holborn Assets. I'm the managing partner for our African business and the chairman of our investment committee. We are the second largest independent wealth advisory in the world, manage about 3 billion US assets around 18 territories globally.
I don't know. Is this all? Oh, hi everyone. My name is Jimmy Moyaha. Like Rob, I wear a couple of hats. I am in the private equity space on a day-to-day basis, but I also have been in financial markets for quite some time, from working for brokerages to setting up brokerages to consulting for brokerages and to hosting a radio show. I host the third largest business radio show in South Africa, the SFM Market Update as well. And we're also doing some podcasting work in the financial space. So a couple of hats, varied experience. Hopefully it's great for everyone.
That's great, guys. I mean, let's tell some stories. I think that's what it comes down to, is people want to know, what worked or what, I've been trading. I make my living trading. The first story I'll tell is that it's brutal, number one. And number two is that it's never static. I wish when I started out, my mentor was a guy, this was 20 years ago, and you could trade like non-farm payrolls. He was just trading bonds, and you could beat the algos. I mean, you could just hit, he was trading bonds, so you'd sell bonds if non-farm payrolls was good, and you just sit and wait for the news to come in, better than expected, worse than expected. And I sat beside him, he was making 100 grand a day. And became fantastically wealthy, just a little bit older than me, and you're sort of learning the ropes from them. And then it changes, right? Like you couldn't really do that anymore. So you had to wait longer and longer for maybe unexpected news and things to happen. And that's what I do, is news trading. So I sit and I write at ForexLive, and I have every news service in the world. I have 8 computer monitors, 2 squawks going, and you're really just sitting and waiting for something to happen. Lately, you're waiting for a tweet from Donald Trump more than anything. But even in the last couple of days, we've seen sort of tariffs reversed here, and you're just wishing that you were sort of in on that and at your desk and so that preparation is a lot of trading. But I don't know if you guys could take me back to when you were starting out in trading, and that these people that you met that either inspired you to trade or that you learned from.
If I may start, so I started trading many years back. And I think, as most of you, I blew up a couple of accounts. Not 1, not 2, but 3 of them. I won't ask people to raise their hands in terms of to share how many accounts you've blown up, but I'm sure the numbers I can just see it, the numbers are high. My turning point came when I met a mentor on Facebook, of all places, not on Facebook Marketplace. He was a Chicago bond split trader, so also from the bond side. And he shared 2 pieces of wisdom with me. First of all, as you've mentioned, trading is the hardest, easiest thing, which sounded as a paradox. And then we were never allowed to call him by his real name. We were only allowed to call him by what he preferred to be called, Jack Shark. What a name, being called Jack Shark. So Jack basically said the other thing was, we want to make money trading, but secretly we want to be right. And in trading, you need to be right to make money. The problem with making money, and when I also started trading, I looked at win rate. The higher the win rate, the better. Now we've got social profiling. So it's not about win rate anymore. If someone comes here with a Ferrari or with Louis Vuitton clothes, that is the new win rate. So I had to learn a couple of things, that win rate is one component of making money. And being right actually doesn't matter. You need two things. You need a high win rate, and you need not high, you need a decent win rate, and your risk to return needs to be decent. If you combine those, you've got a trading edge. And if you execute this trading edge on a consistent basis, you will make money. But I think secretly, I also wanted to be right. I spend all my days looking at winning systems, trying to get to 80%, 90%. And before I hand over, the third thing he told me, our brains are not wired for trading. We have to rewire them. And this is the problem of being right. In our world, we grow up 80% is good, 90% is good. In trading, it absolutely means nothing.
Yeah, go ahead.
I'll start off by saying that I'm not actually a trader like all my esteemed colleagues here. I employ traders to do the work that we need to do. But we have had our share of going into places where we need to find value for clients in terms of what they need to extract. And a big defining moment for me was when I met a guy by the name of Greville Ward, which works for the largest, one of the largest equity managers in the world that trades a crowd called Fundsmith Equity. And what they did and how he taught me was in terms of looking for value in terms of a business. So if a business, for example, has a huge amount of debt, the business will be very sensitive to interest rates. So rather avoid the business with lots of debt. If you've got a big cash-rich business, if it's got huge free cash, it's got a lot of trading all around the world, so it's not single currency. And so they sort of honed in on the various type of businesses that you can bankroll your money into to make sure that you're right over the long term. And that's about 80 companies in the world. And so we started fixing ourselves into these 80 companies in the world. And I know the question will come up later, like, if you're going to be so right, then you can just sit down, trade it, and leave it. But what we realize is the macroeconomics really filter into the trade. So you can't fight the Fed. So if the Federal Reserve says we're going to put interest rates up, it's going to take that company down just like everything else. And then you need to pivot and you need to trade out. So one of the most valuable lessons I've learned is you just don't know. Don't just sit on one position. Don't just trade one thing. I know Warren Buffett says diversification is for people who don't know what they're doing, but I've realized to have a lot of irons in the fire from managing big portfolio money, you have got to make sure that you have a little bit of everything in there. I don't know if that fits the narrative, but certainly that's our lesson here.
So I think my experience is a bit of a blend of the two gentlemen that have spoken before me. Both Lourens and Rob have highlighted a couple of things that I discovered in my trading journey. And I think mine is because from a trading perspective, I started the trading world with all of the technology, with all of the information that was bombarding everybody and all of that. So I'm not as seasoned as the two gentlemen to my right. I've only been at this for 10 years. But in that time, the one thing that stood out for me is identifying the type of person or the type of trader or the type of investor you want to be, because we're all different in that sense. We're different in the sense that some people are day traders, some people are scalpers, some people are swing traders. And for me, the moment I identified the personality type that aligned with my trading style, and I kind of merged those two, that made the most sense to me, because I was then able to take on certain decisions, the same way Rob says the decisions that are taken on the trading desk vary from kind of the experience that you have and all of that. And as Lourens said, from an exposure point of view, diversification or not diversification, for me, the turning point was when I realized that the person I am, I don't want to be a day trader. I'm quite comfortable day trading every now and then, but when I then transitioned into things like portfolio management and private equity and the long-term outlook on things, it fundamentally changed how I viewed the market. I don't remember the last time I looked at a 5-minute chart, because I now look strictly at a monthly chart when I look at markets and I look at why I want to make certain decisions. So for me, my turning point was identifying that there's so much information out there, you're never going to get enough information. I mean, even with the 2 squawks that you're running, Adam, you still feel like you're missing out on information, I'm sure, right? So for me, I then said, this is the kind of information I want. This is the kind of information I need for my decisions. And to distill that down almost focuses you. It harnesses you into the right person that you want to be, but you only discover that from experience.
And it becomes difficult because there's always someone trying to sell you another indicator. Or someone saying, oh, this, you know, you just follow this ratio, this chart overlay, and that's going to give you the answer. And at times, you know, they're right, and then they get attention, and you're trying to follow Kathy Wood, and then the next thing you know, she blows up or whatever. And this is sort of the danger of sort of following anyone rather than thinking for yourself. And, you know, try to bring it back to starting out in trading and your attitude towards risk, like you said. You have to learn a lot about yourself. And I think when everyone starts out, they have this level of conviction that you can only have when you're naive, that you really believe you can do this. And the very stock I ever bought was IMAX. So you guys know about it. You might have been to an IMAX, this big movie theater, gigantic screens. I thought they were going to do very well. This is a long time ago, and I was right. They absolutely did really well. This is the time like 3D movies were just coming out, which I thought were going to do well, but they did well for other reasons. People liked the big screen, and I had very little bit of money, and I put it all into IMAX, and they had an accounting scandal. And, you know, the thing got cut down like 70% in like a day. And this is, you know, you talk about diversification and not knowing what you don't know, and being right, but also being wrong. Or just these different time frames when you have, you know, you're young, you can't think in 10-year time frames. I really don't think you do. So you know, ultimately, I think as a trader in your goals is you're going to make all the mistakes, is to try to survive and only make them once. Or maybe even only make them twice. If you can only make them twice, you do well in a career.
So you know what, Adam, I think something that you've touched on here, you're not really in the investing and trading space until you've been burnt. And Rob said it when he said you've blown 1, 2, 3 accounts, until you actually experience what it feels like to have your decision go so horribly wrong that absolutely everything else is a mess and you can't fix it. That's when you really learn.
It's painful.
When you peel that layer off, that's when you actually start to see, okay, I'm not invincible. Okay, I'm not better than the market. I'm not superior to Fed Chair Jerome Powell making decisions. Lourens said it. When the Fed makes a decision, like it or not, it's going to affect the market. When Donald Trump opens his platforms, his Truth Social, like it or not, it's going to affect the market. And I think what I've seen with a lot of traders, some of the mistakes that have been made, especially in recent times, is traders sitting there saying, but price action says this, but my technical analysis says this. Your technical analysis doesn't account for the fact that the President of the United States is threatening war on the world. And those are the real life lessons that unfortunately only come from watching your technical analysis fail. And not because you failed as a trader or you failed in your analysis. It's because the trading world is not for us to control. It's for us to try and understand enough of it to survive in it. But you'll never control it.
Yeah. you've got to burn some to learn some. They say sometimes. To wrap up the IMAX story, so they had an accounting scandal and whatever, it cleaned out, and I was young, and it went actually to a class action lawsuit. They had changed securities laws in Canada. Like, companies can't just make up the numbers anymore; they get sued. And so the class action, it worked its way through the courts for like 10 years, maybe even 12 years. And ultimately, they had to pay a huge settlement. And I don't know if everyone didn't keep the form, but anyway, I followed it along and filed the forms at the end, and eventually actually got repaid everything that I had lost, which seemed like a mountain of money at the time, but later was a lot less. But so I ended up breaking even on that, not accounting for inflation. But you sort of learn these lessons, and hopefully you never forget them. Tell us about some of the lessons that you've learned and how.
Yeah, I think the biggest lesson, firstly, you're dealing with probabilities. No one here knows exactly what the outcome of a trade will be. And you need to, I think before you place the trade, you need to know that the outcome can be negative, and you need to manage that. Because remember, when I started talking, I said my focus in life was a high win rate, because that's how we are conditioned in life. 80% is better than 90%. If you get 80%, it gives you a level of success, not in trading. So firstly, you're dealing with probabilities. Then the second thing is you're dealing with yourself. In economic theory, it would start that we are rational agents. We are far from rational. We are totally irrational. And if you look at trading as well, the emotions that come into play move from child to adult to parent. The parent wants 2-3% return a month. The child will do anything to please the parent. And we move through this. And the reason why we move through this is because we create expectations. And when we don't achieve these expectations, then fear creeps in. The fear of missing out. We get into markets we shouldn't be getting in. I had an example of someone that's been following me on LinkedIn that got involved in these tariff wars that wiped out his whole account. We get out. We don't get out when the stop loss tells us to get out. Because why? Previously we did it and the market went up. We don't believe that. We don't allow equity or FX to reach a profit target. When it gets into profit, we quickly get out and then it runs further. And the reason is it's fear. And it goes back to this role play between adult who wants expectations, child who wants to please the parent, and the child. The best place as a trader to be is an adult. We can balance it between parent and child.
That's funny. I became a much better trader when I had kids. I don't know if that was coincidence or not. I have 4 children that are aged 3, 5, 7, and 9. And yeah, when the first one was born, I don't know if it's something about the desperation of the psychology or just time. But Lourens, why don't you work with a lot of traders? What have you seen? Who have you seen that's been successful, and what's the profile there? Or tell us about them.
I can tell you a bit about some good ones that we've seen, but I can tell you about some horrible stories as well.
That's great.
In some of my own trades that I've done for clients. So one of the worst things you could ever get is a false sense of your own excellence, and then you think you're invincible and nothing will take you down. The problem is then you take bigger risks. So my biggest client invests about $800,000 a month with me, and so you have to reach quite wide in the investment landscape to make room for all of that money. But when they were still a little bit of a junior client, we said let's take some punts on stocks, and the really hot stock at the moment has to be marijuana stocks. It's got to be great. It's going to be the next big thing, right? And so let's put, I think it was like $50,000 or $40,000 into a Canadian company called Canopy Growth. It's still in their portfolio today at a minus 98%. And then you realize, actually, you don't know anything, mate. Yes, something can be the next big thing. I mean, there were people that said, there were people that Wirecard in Germany was going to be the next big thing, and that got completely wiped out. Steinhoff domestically, you simply just don't know. You don't know what's going to actually happen in the market, in sentiment. You don't know what's going to happen in regulation. You don't know what's going to happen in the underlying company fudging figures, etc. So we've just realized that we don't know. On the other side of that, there are some obvious wins in front of you as well. So if you see something where you've lost big on, oftentimes you're scared to then not go for the big wins. So like when the oil price fell to like $0, either we stop using oil completely, or it's going to go up. And so we leaned into that a little bit and we traded oil. I personally took a bunch of money domestically and shoved it into Sasol, and it wasn't a great deal of money. And about 5 months later, I took it out and bought myself a new S-Class Mercedes. That's the cheapest S-Class car I've ever bought. So you're going to see both sides of that. And I'm glad that you mentioned Cathy Woods earlier. The thing with high spice stuff like that is you need distance. So you cannot see it for today, tomorrow, but you can look at Cathy Woods in 10 years' time and you would put money in there. Because in 10 years' time, there'll be bigger money there than there was today. So the closer the window in terms of investment horizon, the more surefire stuff that you've got to punt less and you've got to bank more. That's my biggest lesson so far.
Jimmy, tell us some stories about traders you've seen successful or flame out.
There's so many, but I think to touch on what both Lourens and Rob have said is it's not just us, right? So I think there's this misconception that this only happens to me. I'm alone in this kind of experience, so to speak. I'll use an example of a punt that went horribly right. And that was a gentleman who lives here in the Western Cape. A gentleman by the name of Koos Becker. Many, many years ago, he took some money, put it into a company called Tencent, and today you have Naspers. That's a punt that's gone horribly right over the years. And I call it a punt because since then, every Naspers executive team that has followed, and this is listed company executives, have tried to replicate that level of success in terms of percentage gains in investments, and it hasn't been done. You see that happen where a business comes in, and Lourens said it, saying you don't know what the outcome of this is going to be. If someone had told you, I think it's now 10, 15 years ago, that you could buy Capitec for R3.50, would you have done it? Maybe, maybe not. Someone told you that R3.50 then turns into 3,400 Rand in today's price. That's the one trade you could have taken to set you up for life, At the same time, Lourens, and I chuckled when Lourens said this, Steinhoff. I remember sitting on a trading desk in the morning, and I've told this story before. Some people may have heard it, some may have not. I came in, I looked at the clients' accounts that I'd had, and one of my clients was in Steinhoff. The market opened at 9 a.m., and the share price had closed the previous day at 80 Rand. It opened at 60 Rand. Now, for a bit of context, I studied accounting at university, and when a share price moves kind of like that, it's a flag. But there's also legislation within the JSE that says there's something called a volatility auction. If a share price moves by a certain percentage, it goes into a volatility auction to re-establish the most accurate price there. The share went into a volatility auction, I think 3 times in the first 15 minutes of trading. I phoned my client and I said to my client, I don't know what's going on, but this does not look right. Do you want to make a decision? And if so, what is that decision? And the only response I got from my client was, I've just wired you another 2 million Rand, make sure it clears onto my account, I'm holding the position. Fine. Happens, we're at 60 Rand. 15 minutes later, we come out of volatility auction, we're at 40 Rand. I phone again. I ask again. This does not look right. Do you want to have a conversation? Long story short, the share price today, we know what Steinhoff is. Client lost probably in the region of 5 to 6 million Rand in 3 to 4 hours. And the conversation that I later had with the client turns out the client happened to know the late Marcus Uester on a personal level. And so that knowledge of that individual led him to believe that this couldn't possibly happen. We couldn't possibly go in this direction. The CEO has told me that this is going to be fine. And then, of course, the biggest accounting scandal of South Africa's recent time broke, and we know how that works. So it can go, as Lourens said, it can go in one direction, it can go in another direction. And it's about looking at the market, and Rob said it, distilling your information and where you want to participate. Understanding that that position doesn't necessarily mean it is the only position in the market. It is the only position out there.
It's amazing. You know, one of the things I want to talk about is the different ways that people make money. You know, I'll sit here and talk about all these rules and lessons and the discipline, and me, like I said, hardcore, every news head, millions of headlines a year, probably 10 means something to me. And that means you're ignoring 10,000. And so that's how I make all my money in a year, just waiting for those. There was even one last Friday. It was a merger arb trade, U.S. Steel. Trump approved sort of the merger of U.S. Steel being bought by a Japanese company. Came late on a Friday, $55 takeout price. You'd still buy it at 49. And there was a nice 10 or 12% gain there because I was in the office late on Friday. Just before the market closed, and there was an opportunity there. So you're sitting and waiting for that. But even some of the better traders I've seen have been just completely ridiculous. You know, it was a 20-year-old neighbor in my street. He had $700 in his account. This is when oil went negative, and he was betting on oil to fall again as it was popping up. Had like a crazy amount of leverage in his account somehow. Made $250,000 US. And just just tapping into his leverage as it was falling in one day. And I never traded successfully again. I don't even think he's trading anymore, but it was like ridiculously against the fundamentals. It was wrong in every way, but he had the guts to do it, and he just was hot for a moment. And there was another guy, I worked on a trading floor for a long time, so you'd see prop traders. Just a technical analysis guy. And he had run his account to like $25,000. He was a pretty good trader. And he just saw this double top on dollar CAD, and he just believed in it. And there's this conviction, right? And both of them, you just have to have the power of conviction to make money. Because once you start doubting yourself, and that's why headlines can hurt you. But he just said, this is a double top on the trade. I'm shorting it. He did it in the futures market. And he wrote it to $1 million, straight up. Didn't take profits at $500,000, at 6, 7, 8, 950. Said, I'm taking this right to this level that I saw, and he did it. And there's this sort of single-mindedness that can work a lot of times for traders. So that was his personality. That's not mine, and that would never work for me. So it speaks to what you said about sort of knowing yourselves and the different things that can work. Why don't you tell us about some of the people you've worked with and their different personalities?
Yeah, look, I think personality is quite important in trading. It's to know yourself. So as Jimmy mentioned as well, you need to be quite clear in terms of, first of all, why you're trading. So I think most people trade either, well, they want to make money and they want to make it quickly. The problem is, like any skill, it takes 3 to 4 years. We are not used to waiting 3 to 4 years on trading because, again, with social profiling, we're seeing all of these beautiful cars, these houses, and they're all rented, by the way. And we're seeing people with beautiful clothing, and we know it's not what it looks like. But I think in terms of personality, it's quite crucial. If you cannot do trading, you shouldn't get involved. You should get involved in swing trading. I think personality is quite important. And personality is also linked in terms of your risk profiling, your emotional control, how you go about things. And then ultimately, every time you place a trade, you need to know, why am I trading? Is it to generate a second income? Is it basically for a lifestyle choice, or is it to generate income?
I mean, those are just wonderful points. I think you just hammer those over and over again because it's so important. And I find you learn about yourself as well. You're talking about buying cars, and it's always a red flag for me. You're running hot, right? Everything's going well, counts at all-time highs, And then you start dreaming about, okay, what am I going to do with this? And I walk a lot. I find, just on the psychological side, I find walking, just going for a walk can be really good to clear your head, especially sitting in front of screens all the time. And then you get into these moments where you're daydreaming about whatever it is, whatever level you're at. And it's just a big red flag to me to say, okay, you're in this psychological space now where you're too comfortable with risk. Or you're taking on too much leverage, whatever it is. And I think that reverberates back into wherever you're at. And the flip side of that, I'll tell, since I mentioned merger arb, you guys remember Twitter? You're familiar with Elon Musk, I'm sure. South African, everybody's favorite. He bought Twitter, and it was trading at 30. I think the takeout price was $50 and $4.20 because it's Elon Musk, and $54.20. And there was this belief that he could walk away from it. Right? And a lot of trading and getting conviction is just research. Like, it's doing the work, and you're sitting and you're reading, you're talking to lawyers and you're reading everything. They're like, he can't walk away from this deal. He's talking like he's going to walk away from this deal, and it's Elon Musk, so you never really know. He'll buy a governor if he has to get out of this deal, maybe. But I think he's going to close this deal. And I think he's going to have to close this deal. So you're buying it, and then you're waiting. And every day there's another headline, and it's just deeply unpleasant. And you're waiting for this deal to close, and is it going to happen? The judge is going to decide, and eventually it's coming down to it, and you're hating every single day, and he eventually does. And I made enough money on that trade to put all my kids through university, and I hated every single minute of it. And I think that's part of you just have to know what you're signing up for a lot of times. And when you go into a trade like that, it's not just going to be like tomorrow he's going to close it. You have to know, and I think there's a value in visualizing that process and saying, hey, listen, I'm going to have, like what I normally do is 10 headlines this year, and I'm going to sit at my desk, and it's going to suck all year, and we're going to write about things and entertain ourselves in other ways, but it's mostly just a waiting game. And you're psychologically prepared for that. And I think knowing that can really help you as a trader. Anyway, what are some other lessons? I guess we only have a few minutes left. What are the single best piece of advice that anyone ever gave you about trading? One thing you'd like the people here to remember.
So for me, it's buy the stuff that you aspire to and want. So for example, you mentioned cars and luxury goods. Buy Louis Vuitton and buy Ferrari as shares. The share prices themselves will buy you the Louis Vuitton bags and the Ferraris. So buy into the stuff that you use. 15 years ago, no one had an Apple or a Samsung. Everybody had a Nokia or a BlackBerry. As soon as that changed, it needed to be sold. And as soon as everybody wanted an Apple and a Samsung, you needed to buy it. So oftentimes we buy into what human beings just aspire to or want. And typically that works well in terms of what we hold on a long-term basis. That's
a Warren Buffett one, right? Buy companies you like, because you'll hold them over time, they're going to do well. Advice?
Oh, advice.
Go ahead.
There's so much. I think one of the best or most useful things that I found was early on in my kind of trading journey. I had an analyst who said to me, you don't need a chart full of signals and technicals and indicators and all of that. And I think for me, perhaps it lines up with the type of person that I am or the type of research that I do. As you said, it does come down to the research that you do. But I can look at a market with two things, a horizontal line and a trend line. You don't need to have an RSI on there. You don't need to have a MACD that crosses over with certain things. And the more indicators you put onto a chart from a technical perspective, the more complicated you're making your own life. And again, that also comes down to experience. That comes down to being burnt, comes down to going through all the things that we've spoken about. When you're looking at a market, information is your currency. And how you distill that information then becomes the difference between whether or not you are successful or not, and coming back to Rob's point, whether or not your win rate is higher or not, and your risk to reward ratios. All of those factors come down to what you're doing with the information you have, because the reality is everybody has access to all of the same information in general. Except for Adam, of course, who's got all the other Bloomberg terminals and everything else that he's already...
ForexLive.com.
Right? But the point around that is the information that I read, the information that Lourens reads, the information that Adam reads, that Rob reads, is not different to the information that anyone else reads. It's how you interpret that information and use that information. And the more of that information you put into something, the harder it makes your decision. Because now one says buy, the other says sell, the other says hold, and you start to conflict with your own things. And then you don't make a decision. And then fear creeps in. What did you say, Rob? Fear of missing out?
Yep.
Is that what it was? See? Fear creeps in, you don't make a decision, and then you miss the opportunity. So less is more.
Well, and I think that's the most valuable skill there is right now, is being able to read a room. You know, when you see, there's so much social aspect in trading right now and online, is trying to sense the euphoria when everybody's all in the trade or when something is utterly hated. And I think there's so much alpha to be made in reading those signals, because there's just a massive schooling, like a fish school of traders right now that go from thing to thing. The incredible amount of money they'll throw at overvalued things as well, which is tough to fight. But Robert, why don't you wrap it up with some of the, your top advice here, if you could distill it.
I think the biggest one, and a lot of you sitting here play with leverage. My biggest one is, and I'm going to link it to a movie, with great leverage comes great responsibility.
Yeah. No, it can be absolutely deadly. We might have time for a question here. You guys feel like fielding a question? If there's anybody has a question for any of our panelists, or we'll take one. We're almost out of time, but over here, wherever you're at.
Great lessons that we've learned. So my name is Netemba Mtulu. I'm a student at the University of Cape Town. So
Louder.
Okay. So my name is Netemba Mtulu, and I'm a student at the University of Cape Town, and this has been very insightful. So my question is, when you are starting like the trading journey, have you ever fallen for like a scam? And like, like how did you recover from that? And like, what made you fall for that scam? Like, yeah.
That's a good question. If you caught it, it's like recovering, right? And it's the hardest thing. You feel like when you lose money trading, you feel like the stupidest person in the whole world.
The scam one is, I'm going to use this as an opportunity to sell. I've got a regulatory panel a little later today at 3 o'clock. Come back to that regulatory panel, and I'm going to talk about specifically the things you need to be looking out for from a broker. Holborn Assets is a registered asset manager, Cat 2 licensed, nothing to worry about. Scope Markets, ODP licensed, nothing to worry about. It's when the licensing starts to be questionable in the brokerage space that people start to be susceptible towards these things. The reality is you can try and escape it whether you want to or not. You can believe that your broker is the best. Your broker prioritizes their profit over the wealth of your account. And to avoid scams is to deal with legitimate players. That's why when we put together these conversations, I've been doing this since Finance Magnates started in Africa. Every time we have these conversations, Adam knows it, we don't play around when it comes to making sure that the players that are in the rooms that you guys have conversations with are players that are licensed and regulated. Rob's been the CEO of another brokerage before this, right? Lourens has been in asset management for, 20 plus years, a little more than that, somewhere there. We're not going to present you with something where, the broker is 3 weeks old, we've just started out. Those are flags. But again, that's just one of the things to look out for in identifying scams. Something that someone's always said to me is, if it's too good to be true, it is. And that person that said that to me is the divisional head of enforcement at the FSCA, the company or the regulator that regulates our industry. And we've seen time and time again people promising unrealistic returns. Give us 5,000 Rand, we'll turn it into 500,000 Rand by the end of the week. Now, it's very possible to do that, but we haven't discussed how much you're risking, what the conditions are, and all of those things. And so the misconception is you can get rich quick. Rob said it, Adam said it, this is a long game. This is not, you might get it right once. Yeah, the gentleman that you mentioned that got it right on the afternoon, made 250,000 and all of that. We've all heard that story. But that story doesn't mean that that is a scam.
Yeah, I didn't tell all the ones about the heartbreak either. There's a lot more of those.
Right? So
it's seeing people blow up is
identifying what to look for in your trading environment, in your broker, in the people that you deal with, in the regulation and all of that, is how you protect yourself.
Yeah. And to wrap it up on a story, I'm sorry we don't have any other time, but I knew a great fisherman, and I come from a part of Canada, it's all lakes, it's just a beautiful part of the world, and you just fish in the lake and it all seems very random. He said the key to fishing is confidence. You have to have confidence in yourself, and you have to have confidence in your equipment. And the equipment in trading is your broker, and you really need, and if there's one thing you can do just to have confidence, and getting more confidence as a trader is working with people you trust and who are trustworthy. You never have to worry about your money, it's coming quickly, everything like that. That is probably the simplest step you can take here to work with those kind of people. So I'm sure we'll have a chance to talk after, but I'm sorry we're out of time for this panel. We're going to have another one just in about 5 minutes, so I'll have to leave it there. Thanks, guys, so much.
Thank you very much
for this panel. If we get a nice...
Thank you.